Good morning, everyone. Welcome to the On Time On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. Today's topic is investing in car companies. If you're watching CNBC this morning, the big exciting news, and I can't believe I'm going to say this in the same sentence, but GM, General Motors, and exciting in the same sentence. Yes. So GM evidently, according to the experts at B, at least that get on the primary airtime for investing, say, yeah, GM is a tech company. Well, and of course, it got a big upgrade, and of course, it's screaming higher right now. I'll show you the chart here in a second. But I think you really need to, when you hear stuff like this, you really have to back out and ask yourself, is it really a tech company, or is it possibly a car company? And if it's a car company, which, oh, by the way, it is a car company, you're looking at the high cost of labor. You're talking about, margins that are kind of razor thin. You talk about not very recession proof, right? People just stop buying cars. I mean, to a certain extent, you have to buy more cars all the time. But certainly when you have a discretionary time where discretionary income is down, then you don't have the you don't have the car sales, and you're going to get hit. So I think you can relate investing in cars like investing in the airlines or airplane makers, is that it's just not, you don't have nearly the same margin that you have when you have a legitimate tech firm. That doesn't mean the stock's not going to move. We're going to talk about General Motors today. We'll talk about Ford and the recovery that's happened there. You can't talk cars without talking Tesla, right? Because Tesla, now you could argue Tesla is a tech company, but it's not. It is a car company. And they run into, eventually, the stock screams higher. And then what does it do? It flatlines, because you just can't scream higher for no reason, even if you're selling a bunch of cars. And then, of course, last one we'll talk about, which is my favorite, is NIO, which is the electronic vehicle maker from China. The stock has moved higher. It's come in by about 50%, though. Not quite. But obviously, when you talk anything related to China, you have country risk, government risk, all of that stuff. So there's a lot of risk there. But when you think about the market of China and now electric vehicle space over there, is pretty impressive. So again, that's what we're going to talk about today. Should you or shouldn't you invest in the car companies? We'll take a look at those charts and again, make your own decision off of that. As far as our topic of the day, we'll talk QCDs, which are qualified charitable distributions. Again, if you're doing charity work and you're taking a required minimum distribution, or you want to use money from your traditional retirement accounts, then you can, and it's tax-free. So if you're going to use money, if you're going to donate money, you might as well donate money that you never paid taxes on versus paying the taxes first and then donating the rest, right? So we're going to talk about how that works and how to do it. For our longs today, obviously, the futures are up big. So you got GGPI it's a SPAC, blank check type company with a Polestar. Is the company that they're basically going to take over and become. You have General Motors, which is in the news for 20 to 30 electric vehicles in the next 2 to 3 years. I don't know, that alone just makes me laugh, right? Does the market support 20 to 30 additional type vehicles to the ones we already have? I don't know. I don't buy it, but you decide. And then Levi, the good old jeans maker, right? Crushed earnings is this morning that they crushed earnings and pretty significant move to the upside there. So that's kind of my favorite long for the day, because it has some undervaluation component to it. All right, that's what we have for today. And then if you're going to short something, short volatility today, because it appears that it's a Friday market going higher sort of day off of yesterday's sell-off. If you're catching us on replay, thanks for checking us out. And again, hit the subscription and notification bell so you get notified live. If you want to come into the room, free trial for a week, and then it's $25 a month, which you don't see as a chat window and a Q&A window that's above me here, where people can chime in and ask any questions you want. And with that, let's go ahead and get started. All right, welcome back, everyone. Here is the lineup card for Friday, July 9th. Make sure you have your Q&A window set up correctly with all attendees selected and your chat window out as well. All right, disclaimer, just financial education presentation, so you have to do your own due diligence before acting upon anything you hear in this presentation, and full disclaimer information is available at ototnow.com. All right, mission objectives: grow our money, protect our money, and live off our money. So the question of the day is investing in car companies. Should you or shouldn't you? You can tell already I have a negative view on these, but it doesn't mean that the stocks aren't going to go up. And if you love these companies because a couple of them are great American names, then invest in them. Just don't expect. Is my cautionary tale to you is don't expect that they're going to have the tech-like numbers. Like, is GM going to double and triple in the next few years because they make cars that have tech in them? I don't buy it. Again, my real thesis here is and the only way you can really justify Tesla's valuation is, from running up from a below $100 stock all the way up to sitting around $700, is that and I just rode the Hyperloop. I need to get that video out. I need to make a video this weekend about riding in the Hyperloop in Vegas. But yeah, it's slick. They, bore holes under the earth. You go down an escalator, you hop in a Tesla that, again, these all had drivers in them, but eventually they won't. You hop in a little Tesla and you go running through some tunnels where it's a literal tunnel. I mean, the tube isn't much bigger than the car, and you go zipping off and you show up where you're supposed to be. So again, it's a supplement to regular transportation that's above surface. And of course, below surface, you have subways, and now, a whole Tesla fleet below there. So if that goes mainstream, and if individual car ownership subsides, and meaning people don't own cars, there's just an autonomous fleet of Teslas running around above ground as well, and you pull out your phone and bring a Tesla to your door and you hop in it and you pay through the app just like you do with Uber or Lyft or Didi, if you can say that without everybody getting mad. You could go in and that's your method of transportation. It totally negates car ownership, or the need for car ownership, if you will. If you're in a city type setting or a suburban type setting, obviously for remote, that's not going to work. But so that's the thesis. And if that's supposed to happen by 2024, I don't think people are going to give up their cars. I mean, maybe I'm too old to make the mind shift, but I don't plan. I plan on holding my cars for another decade or two. Now, maybe down the road, that's the future. I don't know. But anyhow, just think about that thesis. If that thesis happens, and again, I think Apple's your best bet to invest in that. But if that thesis happens, what's going to happen to a big car company like General Motors or Ford? Yeah, they aren't going to be around. Yeah, if the Tesla thesis comes true, they will not be around because there's not going to be a need for all of us individually to go out and buy cars if there's cities providing cars and as far as public transportation, if you will. So anyhow, something to consider there. All right, question today: what's QCD? We'll get into that a little bit later. Our flow for today: long, short, open, short, long. We'll take a look around the markets. Again, everything's in the green. Kind of a big bounce from yesterday. We'll take a look at the headlines. We'll go talk about those 4 companies. We'll get into the short-term trading, which are all longs, and we'll take a look at that here in a second. Contingencies and academic resources are standard. All right, let's take a look at TD Ameritrade over here. You see 4 screens in front of you. You have the SPY, the GGPI that's long, General Motors long, and Levi long, and we'll come back to those. But again, here's the General Motors chart. This is a 5-minute chart, but it shows you that move up from 54 all the way to 58. I mean, it looks a lot bigger than it is, but it's still almost a 10% move from the trough of where it opened yesterday. All right, but to zoom out, where are we with the market? Even after the big sell-off yesterday, most of it, again, was the gap down. So we actually ended up with a green candlestick. It popped there towards the end of the day. So where are we in relation? We're en route to new highs again. You really don't see that until you focus in on this, but here's where we were on Wednesday, closing at new highs. We gap all the way down to here. We finish in the green on the day. And then again, we're almost back to where we were on Monday, right? So almost break even for the week. If we have any decent day, we could be even close to new highs. So we shall see. All right, let's go take a look at the headlines, switching over to CNBC.com and refreshing for your viewing pleasure here. There we go. So you do have NASDAQ's a little bit in the red. The Dow and the S&P are in the green. Europe, everything's in the green, pretty big, actually. So pretty big bounce off of the times yesterday, or for the sell-off yesterday. Asia is a little bit mixed, but again, not much in the red there. As far as the bonds, bounced significantly. The 10-year, there was talk yesterday about the 10-year going below 1. Yeah. So these are the same people they aren't the same people, but they're carrying the same headline weight as the folks that were saying it's going to go over 2 like 6 weeks ago because inflation's out of control. So, that's why I have CNBC on every day. I have it on mute because I don't want to hear this nonsense, right? People will talk about just like, it's like, learning all your going to med school on Facebook, right? You don't need to listen to these fools, even if they're on a mainstream media, if you will. All right, oil still up around above 70, well outside of our normal range. Gold and silver are up slightly off of yesterday, and then crypto. Again, it's overall been kind of a sell-off in crypto, even though Bitcoin's bouncing a little bit there. All right, as far as our headlines, you've got the GM call that'll be in here somewhere. Well, maybe not. Faded a little bit. Outperform stock trades like a tech company. Okay. Don't you believe it is what I would say. Don't expect tech-like returns out of General Motors. Yeah, it could go up. I mean, if they come out with cool cars and they sell, yeah, the stock will go up. I got you. But it's not going to be like it's not the next Microsoft. So just out of the brain, divorce car companies from tech. Okay. Amazon got an upgrade, Costco got an upgrade, Visa got an upgrade, AMC got a downgrade. If you've noticed, theaters are back open. Our Flix Brew House, which again is where you can watch, have beverage and food and watch a movie, actually did open back up, even though they said it was going to be closed permanently. A lot of competition in this space, and this downgrade I read this morning, they said just AMC has too many screens. Unless they can repurpose stuff like watch a movie while you're getting your car detailed, or people are doing your lawn. I mean, there's got to be something else going on than just watching the movie. Otherwise, you'll stay home and watch it for 10% the cost and have pop your own popcorn versus the $7 butter, yikes, popcorn at the theater there. Even though for some reason that tastes better, but I don't know why. All right. That's about it for there. Let's look at the car companies real quick. So let's look at General Motors first of all, since that's the one in the headlines. You can see basically it's been powering higher for about 9 months. You get down here, PE ratios. Yes, those are small. Certainly that would be attractive. Not much of a short float, and could it go higher? I guess, but don't get too excited. I like if you were to pick between the two, and I own a GM. I own a GMC Denali, so I mean, I like it. I don't own a Ford anymore, but you see Ford certainly come in. I think that's because people who invest in car companies are switching from Ford to GM here. But it's really made a run too. It's also got the single digit P's. It used to have this huge dividend. They cut that. You knew that was happening. And then lastly, we'll look at Tesla, which again was the market darling for so long as it ran from 400 up here to 900, and then basically selling out after that. Not much. It's hard to justify much further upside, to be honest. All right, we have a few seconds to the market open. Let me get set up. Good morning, everyone. Welcome to the On Time On Target play of the day. We have 5 seconds to the market open. Actually, ding, 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 there it is. So we have 4 screens in front of you. The S&P on the 1-minute chart, again, well into the green. We'll take GGPI here off of the 1-minute chart, or put it onto the 1-minute chart. It was up a lot earlier, so it is a long for the day. And then you have General Motors, which we talked about earlier. We'll focus in on that. You can see the big move pre-market there. And then Levi is my favorite of this group. I was already on a 1-minute chart. We'll kind of zoom in here. Absolutely crushed earnings. So we'll kind of let it set the low of the day, and then we'll try to take Levi higher here. I do like that these names are selling off. I prefer that Levi came in a little bit before it goes marching higher, but I don't think it's going to come in too much, to be honest. Big red stripe there in the market. All right, so 29. So you think 30 cents as far as your stop. So 29.30. So the entry would be 29.60 to the upside. So it's got plenty of volume across the board for that one. All 3 of these trades. I actually kind of like this GM trade a little bit more. So this would be a 50-cent stop, 58.30 to 58.80. Let's do GM instead. I just like the setup. So 58.35, it'll be a 40-cent stop. We'll go 58.35 to make a mark here. 58.75 is what we'll look at for the upside there. Again, up 4%. So again, the bottom of this day, the low of the day has to hold if we're going to take this higher here. Again, the entry point going to be at 58.75. All right, Levi, we didn't really get an entry there. 29.30, 29.60. We would have been here, so not much to be able to do now about that entry, but we're still getting a good entry here on GM. GGPI, you can see the volume's a lot less, a little bit not attractive there. ALF is another name that's going long. You may recognize this from the other day. It was the one that had the 20R move after we busted out of the trade, so kind of annoying there. But nice thesis through the digital screen makers or digital ad makers for Uber and Lyft, if you remember that thesis. So kind of a pretty cool thesis there. All right, so 58.25, we're going to use a 40-cent stop here. There's the big move down in Levi over there. So 58.65 is what we're targeting for our entry point, 58.65. Check my math, 25 to 65, 40-cent stop. That is correct. And again, it's got to hold it right here. All right, market flip back to the green there. Let's go a 35-cent stop. I really like this. If this flips higher, I think it's going to run pretty good. So we use a 35-cent stop. So looking at 58.60 as the entry here. If that bottom holds, it's not. So the numbers are off. And we're going to reset lower here, which is good, right? All right, 58.15. So if that holds, then we would be in at 35 cents, 58.50, entering right here. So again, expecting this to flip back long. So 58.10 now to 35. All right, we're 4 minutes in. This is still fine as far as it flipping. You see the market power and higher here. Okay, we use 58 even, as long as it holds 58. There, it looks like the bottom. So 57.95, we use 58.30 as our entry. If it breaks through 57.95, I'm not going to take it. Okay, it did. I'm not going to take this. All right, so you can sit here and wait forever for this to bottom. It'll probably bottom now that I'm going to stop talking about it. But yeah, you can still take this back long if you want to sit around and dork with the trade. I may look at it here in a second. So I also want to look at the VXX short, see what's going on there. -3, selling off a little bit. All right, finally we get to move back up. So 57.90, so 35 cents is 58.25. So waiting for 58.25. This thing has got to flip up to the upside there. What is that line? All right, 6 minutes in now, waiting on this thing. We're almost 6 minutes. So again, 58.25 to the upside here. Let's go a 30-cent stop, 58.20 to the upside. You can see that's volatility. That's a volatility spiking here. All right, let's check in on Luck and Coffee, see what's going on this morning. It's up a little bit. Still waiting on the entry here at 58.20 on General Motors. Long. make the same case for trying to go long here in Levi, but it looks like it's just not going to happen. So I like the entry in a GM better here, but again, there we go. Come on up to 58.20. If it hits that, you can take it long. Again, 30-cent stop. Looks like it is going to hit. And 57.90 is your exit. So waiting for 58.20. Don't take it before it hits. There you go. 58.20. We are in it to win it, and 30-cent stop down to 57.90. So on the upside, 58.50 is going to be your first R. 58.50 is your first R. 58.80 is your second R, and then your exit point here is going to be 59.10 is your exit point. So again, we took it here at 58.20. Put the long arrow in. And it's got to hold that low of the day at 57.90. I feel comfortable with this trade because it sold off so far. So for 6 minutes, it basically sold off, and now people can pile back into that name. So I really like that trade. But pull it up on your side. Pull it up on your own screen for you will, because I'm going to switch off of this and get over into what's going on in the rest of the market, because I want to see what's going on, what's up so big today. All right, LKYF, spec name, 18%. Same thing with CLXPF. Mind Medicine is up. American Outdoors. There's luck in number 4 on the leaderboard. DD, is it safe to buy DD here? I wanted that sustained move higher. I would say not yet. Let's give it Friday to see what's going on in DD to see if it holds before we add here. I think it's a little premature to add. All right. Bank of America, the banks had a big news story out this morning, so I expect to see all the banks going to be up a little bit. I see Win bouncing around. All right, see what's in the red here. We got AMC to the downside, Zoom, NMDBF is a spec name, CRISPR, Roblox. Roblox has been kind of selling off. Not worried, just want to look at the chart. So it sold off from basically all week, and then it's kind of flatlining, got touched pre-market yesterday all the way down to 82. Again, not worried about it long term. I just want to see what was going on. FireEye, cybersecurity, DraftKings, obviously, that got hit yesterday, so I expect that to bounce. All right. So lots of good names in the green there. Let's check our trade. So again, we took it at 58.20. It's at 58.50, and again, powering higher here. All right, let's go over to CNBC again. We'll talk about that qualified charitable distribution, which I need to type in here. See if just QCD hits. So again, this is a government incentive to be able to, back on camera here, government incentive to be able to donate to charity and get a tax break. So it's it's a pretty good system. So if you are, no matter when you do it, if you donate money out of a tax deferred account, then you don't have to pay tax on that money. So here's the different rules that go with it. We're not going to get any too big, other than it does have to qualify. Politics do not qualify, so you can't get all political with your IRA and try to move the needle there in the world politically. But you can for a lot of other organizations that are kind of quasi-political, like a conservative Judicial Watch or some Faith and Freedom Coalition. There's a lot of you could argue they're political entities, but they're not candidates, right? So they support things. So those do qualify. Either way, Schwab keeps a master list. So as soon as you put in for this, they see what name you have on it, and they check that against their master list, and then they'll disapprove it. They won't cut the check for you if it's somebody that doesn't qualify. So, and then what happens there is you'll receive a form that at the end of the year in your tax forms, it basically identifies that contribution as tax-free, so you don't end up paying taxes on it. So pretty slick deal, especially if you're making, you're at the later stages in life and you're starting to give more and more money away. It's a pretty good way to do it. If you have any questions on that, reach out. All right. Let's go back to our trade real quick and I'll close out for the day. Doesn't look like it's going to hit it while I'm on air here, but already up an R, and I like that it sold off all the way down here. So again, I think it holds the low of the day here, and I think it is going to be a decent update in the market. So just continue to hold this. You can leave your stop here, or if you're like, hey, I really don't want to lose money on a Friday, you can increase your stop to your entry point wherever you got it. You know, it's going to be somewhere in this range, and that way, if it does turn around and flip and go down, you haven't lost any money. So I'm leaving it all the way down here 57.90. I'm holding out for 59.10 because I think it has a much better chance of hitting higher than lower. All right, that's all I've got for you. We are back on Monday, so you guys have a great weekend, and we'll talk to you next week. Bye.